What is going on, my beautiful people? We are definitely live. Hope you guys enjoyed your weekend with the family to do whatever it is that you needed to do to catch up on things. We're here. We are here Sunday night. The futures are doing what it does, getting ready to prepare for tomorrow. And the big question is, what is everybody going to do this week? What is SPY going to do? Are we falling? Are we having a crashing market? Or are we going to rally from the lows? All right. And the question to me is right now, the question that comes to mind is, are we going to crash? And my answer is no. And I'll tell you why we shouldn't get overly bearish. Okay. And like I always like to do, introduce myself. My name is UV the Great, and I am representing by the Unique Traded Group. And we like to do live commentary and stock talk. For those beginners, intermediate or advanced traders looking to come in and gain some insight. We look forward to having you if you want to join the family. If and only if the video is valuable to you, you can check out the link below, join the free Discord, and check out some other valuable information. So let's hop right into it, right? Then bring you guys all over here for nothing. Right here we have a daily chart of the SPY. And I just wanted to talk about, this just drop. Clearly here you can see that 580. 580 is the line in the sand. 580 is the line in the sand. I talked about this in my Discord. We'll go over some notes if we have time. I don't want to make this video too long. But 580 here is the line in the sand. And what does that mean? Well, 580 could act as resistance, or 580 could act as a demand level. All right, and just because the demand level is strong doesn't mean we have to rally back to 591 or to 600 immediately. Things just don't go straight up. Of course, unless if we get a gap up on data, which is another story, right? Because we do have major catalysts. And so what I want to do is I want to talk about next week. Right now we have pre-market levels around 579. Last time I checked, the SPY was around 579. So we're teetering in between that range. The trap zone, I would call it, of 578, 580. And so I want to be cautious and wait for tomorrow. But if you can just check out, right, hone in a little bit. Now, we have created some lower lows here, and I don't want to suggest that we don't have any more downside, because we definitely can have some more downside. This is a head and shoulders pattern. Here's a shoulder, head, shoulders, like a hunchback, another shoulder, as we rally back from that drop before. And here's a neckline, and we have breached that neckline. So we are making lower lows and lower highs, and so we can see some more downside. I want to bring to your attention that there's a gap here that was created months back, and here is the number. Here would seem to be 574. I have some notes for you guys as well. I'm not just calling a number off the top of my head, as you can't see the number here, but you can see that this is 570. So right around here is a gap fill to the downside, 574, 575. So if we continue to see 580 act as resistance tomorrow going into the week, then we can see further downside. Absolutely we can. All right, targeting 575, 577, and of course 570, depending on the momentum for today. Are we going to be in a trending day, a narrow range day, or are we going to be inside of a test and retest day? And with the data that we have, guys, you never know what you're going to get. We could be in a range leading up to Donald Trump inauguration for the next president. There are some people who are sitting on the sidelines, and I just want you to understand what we're dealing with. Don't get overly caught trying to buy puts at the bottom the same way it happened here. Not to say it could happen, but it's always a good thing for traders, whether you're retail or a hedge fund or just somebody that's been doing it for a while. It's always good to know, hey, things can react a certain way at certain levels. And so what is the psychology? Psychology is don't chase and wait for things to give you confirmation. All right, so let's go over here to the Discord. All right, appreciate you guys rocking with me thus far. I wanted to go over the top tier outlook. I like to do this part of my Discord for the group. Each week I do a top tier outlook, and just to go over some notes on SPY and the broader markets. All right, and so let's just take a read, okay? And then we'll hop over to the SPY charts and some other correlations before we end the video, okay? Now, this is a little bit of SPY insights, ATR, and some strategic ways to look at how to trade coming up next week. All right, so bear with me. Like I said, this is part of my top tier outlook inside of my Discord, and so I post these things, and so it's a journal, you know, it's notes for me, and I want to read it to you guys just in case you're not a part of the Discord, and or the people who are, you can follow along with me, and we do it together. Okay, so take this walk with me. I posted this yesterday at 7 o'clock a.m. Top tier outlook for the week: be greedy when others are fearful, and be fearful when others are greedy. SPY market insights and strategy. Market context. So the FOMC drop around December 18th, 2024, last year. Just like historical patterns, they demonstrate a sharp move down. We got a sharp move down, FOMC, right? And these related drops can quickly reverse. For example, SPY dropped to 583. The day of the FOMC related news. We dropped to 583. We reclaimed losses and we rallied to 599 within 1 to 2 trading days. Respectively. When everybody was claiming that we were going to fall more. Okay, the same scenario I gave you on that stock charts daily time frame scenario about being cautious. All right. Market structure. Right now, currently, bearish trend dominates. We have a lower lows, we have lower highs. They're shaping the market. The key levels to watch: grab you a pen and paper, grab you some coffee, some water. I want to take my time, give you these notes. Maybe you wasn't prepared before. All right, we're going to talk about these key levels. All right, let's get to it. So, the key levels to watch on SPY: the resistance level is 580. A critical test level for Monday, January 13th. A rejection here could confirm bearish continuation. Keep in mind that 592, 594 are also targets that could turn into bull traps. If they hold 584 especially and close over into the next day, it will act as demand, triggering 585. So make sure to secure profits at these levels above. We don't know what price would do, okay? Especially since we have data all week. Guys, we have a jam-packed week full of data, okay? Check forexfactory.com, all right? Let's quickly show you forexfactory.com. This is the website that I use to check the economic data releases dealing with inflation data, unemployment claims, CPI, PPI. All right, and tomorrow is Monday, January 13th. We do not have any major red folders. All right, we don't have a lot of things happen on Monday. Okay, so it's fair game for tomorrow. This is the sentiment that I read. There's no fair game. I mean, it is fair game because there's no major news, and we have options expiration day that happened on Friday. And so this is where the trap lies, knowing that we don't have any catalyst that can stop the next move. The 14th, we have the core PPI Tuesday, all right, which is why I want to secure profits on Monday and play day to day. Always be careful when you have data releases, okay? It's just something to think about. Wednesday, we have core CPI, some more CPI data, and a couple of other things leading into the day. Some FOMC members going to be speaking, and up until Thursday we're going to have some unemployment claims, some core retail sales. It's going to be really juicy. And Friday, of course, we have the retail sales, which is a red folder moment. These red folders that you see on Forex Factory just mean volatility. It's going to be a lot of volatility. All right, and I'll talk more about this later in another video. If you have any questions or any comments about it, let me know. All right, and so as you can see, next week also is going to be earnings. So earnings is going to be coming up, which would mesh well with retail sales, and we can check the earnings calendar as well. But for now, let's get back to the Discord. Okay, right. So where were we? So if support 580 fails, look for downside targets like 578, 577, 75ish. A gap fill at 574. Basically, there's a gap down to 574. If puts were to work out, this will be a place to take profits. 574. Okay, with potential downside to 560. And this is explained below because 574 can act as a resistance level or a demand level. It all depends on market reaction and order flow. Okay, but just understand the psychology behind put players taking profits around 574, which can create a gap fill reversal or a gap and go. Okay, all right. Current price SPY. At the time of this message, which was yesterday at 7 o'clock a.m., SPY was sitting at 579, down 10 points from the January opening price of 589. It's 8:22 p.m. right now on the 12th, so that could have changed as of then, but that's what it was now. That's what it was then. All right. Why does a monthly ATR matter? The average true range gives us an expected price movement range for SPY. In downtrends, the ATR is subtracted for the monthly opening price to calculate downside targets. Example, January opening price in real time was 589 minus the ATR, which was 29, equals a 560 target zone, which would align with the potential downside to 560 if 574 and 570 were to fail in the coming days and weeks. Okay? All right. So in uptrends, the ATR is added to the monthly opening price to estimate upward potential. This calculation aligns with broader trends. Downtrends amplify bearish targets, while uptrends highlight bullish opportunities. Okay, hopefully you have a light bulb moment. As you see, I like to be humorous in the Discord. All right, next point is sentiment and fundamentals. And I hope you guys are finding this valuable. I put a lot of work and a lot of thought into this, and so I just want you to realize that this is a very unique trading approach that's been effective, and hopefully you gain something from it. All right, guys. All right, so sentiment and fundamentals. Investor uncertainty. Trump's policy changes create hesitation, with many sitting on the sidelines. Major indices like the MDY, the QQQ, IWM, and SPY remain in negative territory. The Federal Reserve stance. No immediate rate cuts. Mixed messaging from Fed members signaling potential overreaction to inflation concerns. So there are mixed messaging from these Fed members. All right. And price has been overreacting. All right. There are a lot of mixed signals. And so the fear and greed index is approaching extreme fear, reinforcing caution in the short term. Let's click on this. What do we have? This message says, be fearful when others are greedy, and be greedy when others are fearful. Okay, let me read it again. Be fearful when others are greedy, and be greedy when others are fearful. This is a guy, Warren Buffett. You might know him. I don't know. You might not. But it just goes with aligning with the fear and greed index and how to gauge sentiment and what the market is really trying to say. So what's really driving the market? And right now we are in fear. All right. Now, 27 is where we're at now. The previous close was 32. So we've had more fear. Now, I like to say this. Here I have the inverse effect. And why did I say that? Because sometimes there are opportunities in certain indices and certain sectors that play a role in, basically they're affected by the inflation measures and the data that are released. So if we have higher rates, some of the cost for production for parts for some of these companies will be higher, more expensive to buy, so they have to raise the price, which causes inflation. That's just a light version of the correlation with a fear and inflation and greed. Okay, and so most of the time the inverse effect is if people are fearful, it's at very, very, very attractive prices, and what'll happen with SPY is it'll start rallying, and some people are going to miss the boat because they were overcalling the market. Now, just a theory that has played out, but it can play out. So I encourage you to take notice and to be cautious and to pounce when these moments present itself. Okay, so the strategic takeaways. And before I go here, I want to let you know that it is very important to be cautious, to be overly bullish and bearish because of the times that we are in, especially if we are in a narrow range for a trading day. Narrow range days typically are better for selling premium. Trend days are better to buy out of the money, and test and retest days are better for reversals. Okay? All right, so back to the top tier outlook, and we're going to wrap it up. Strategic takeaways, very strategic takeaways. Stay methodical and prepared. Use ATR base levels and trend alignment as a guide for price targets. You don't have to trade every day. Okay, guys? You do not have to trade every day. The market does not deserve your money every single day. So wait for clear setups to act decisively. All right? Plan for both outcomes. Bearish case. Monitor 580 resistance on Monday. A rejection confirms bearish momentum, with put options targeting 574. Now I put 560 because sometimes we get these parabolic moves with data releases. Volatility brings price action, and traders love volatility because the better the range, the more money I can make off of the money that I invest. All right. So bullish case. If SPY reclaims 580 plus with volume, prepare for potential rebounds or accumulation zones, with 582 and 584 being targets and potential reversal pivot points to go back to the downside. Why? Because these are zones to take profit, all right, in decision making zones, all right, especially if it starts barcoding. Why not just take profit, assess, and come back, right? Maybe take 2 good trades in a day. Okay, all right. So pay attention to price action around 580. It will determine the short-term bias. All right, so react strategically. This is the action plan for January 13th. Watch for potential overnight price absorption and be ready to adjust. Stay updated. Remain informed on news surrounding Trump's policies and Fed commentary, and they may shift sentiment rapidly going into the next 2 weeks. All right, so I want to give a reminder. Options are tools to profit from both sides. So build your toolbox to adapt to any scenario. And FYI, we do have earnings next week, and it is packed with Fed speakers next week. PPI Tuesday, Wednesday the CPI, initial job claims on Thursday. So this is the perfect storm for the plays that I gave out. You gotta love volatility. All right. Again, 578 is the neckline on the daily time frame on SPY. So if 578 breaks, we could see that 575 and 570. All right, but we need to see 578 and 580 act as clear resistance in order to get that. All right, so let's go over to SPY on my trading view chart. Okay, we are here on the monthly chart. All right, I just wanted to point out here, back in 2023 we had some similar drawbacks. Right, we fell here. There were news. You can look up these articles, right? Oh, the market is over. The market is done. We're going to crash. The market is going to zero. There were a lot of articles coming out in 2023 on this monthly chart, all right? What ended up happening? We rejected, created a cup and handle. We bounced. There was a low of 409.21. Okay, there was a low of 409.21. And what happened? We end up rallying. October, the dip was bought, and we rallied. Looks like 49% to today. And so you get these pullbacks now because people who are already in are taking some of their profits, and this is a very important element. Don't get confused with the writings over here. Okay, I just want you to understand that and see that. We're gonna move down to some other ones so we can see the rest of the chart. Okay, all right, so now let's go down to the hour. All right, now I'm very aware, like I said in the beginning of the video, that we definitely have we could see, and I say definitely, but we could see some more downside based on the current market structure. Okay, but I want to go over some quick notes. All right, and I hope this makes sense to you. And I have some notes here that I'm very prepared for. Okay, now Max pain for bulls. If this slips, price will slip to 575 and 570. All right. Okay. Here, below here puts to 575 or even lower. Target 579.50. First take profit. All right. Right here at about 580, we have a point of control on the 5-minute time frame. There's that 580 again, and 580 could act as a pivot point. Okay. We have here 580.84. It's the high of the current range on the 4 hour. Now we're on the 1 hour time frame, but I made this note on the 4 hour, so I like to be able to see all my drawings and my notes go on every time frame, so I can see the lines and things that I put up here to quickly be able to react to it. Okay, so 580.84 is the high of the current range on the 4 hour. If it acts as demand and breaks and holds 3 times on the 3 minute, led by confirmation of volume, then I want to see calls to the upside. Okay, here we have 582. 582, where buyers and sellers agree, could act as demand to turn on Heikinashis and monitor order flow, option chain, and you want to use advanced orders. And I go into this in further detail in another video about advanced orders. But you want to monitor the option chain and the money flow and the order flow, and you do that by watching the volume or in the option chain. You want to see open interest volume, and you want to try to get the high deltas. Some of the out of the monies are not going to have a higher delta, but I do like, if the probability is trending and we have volume, out of the monies are not so bad. But I don't want to do anything lower than 50 delta, really, on the real side. 50 delta or higher is better probability, right? Because delta moves lockstep with the stock. Okay? All right, next note. Take profits here at 584, 5-minute time frame. If 584 acts as demand, wait and monitor structure on the 1 hour, 15-minute, and 5-minute. Think about targeting 586 and 587. These are possible targets if 584 holds. I'll read that again. Take profits here at 584, because remember we tried to take calls at 580 if it held at demand, right? So if 584 acts as demand, wait and monitor structure on the 1 hour, 15-minute, and 5-minute, and think about targeting 586, 587. These are possible targets if 584 holds. Because this is a breakout zone, a 100% mark, auction level, this can also act as bull traps. So be careful and secure profits if you're day trading, all right? And like I always like to do, I like to go to the intraday time frame to see what we have now, all right? And we are still hovering. We are still hovering below the 21 EMA right now, the 21 exponential moving averages. Just a quick note, guys, my style of trading has been like this for years. More specifically, my triggers for me to buy, it's not about being right or wrong when it comes to trading. It's about being able to spot high probability setups based on your trading plan. Okay, and so the most ideal risk to reward for me, I found through the years of trading, is to buy calls above the 21 SMA and to buy puts below it. Okay, because some of these moments create burst of energy. For example, case in point, right here, when price got above this gray line, which represents my 21 exponential moving average, it bursted to the upside to around 584. And right now we are almost close to that same breakout zone around 580. And so this is why I say 580 could act as demand or resistance, and that's where we are now. Okay, now before we finish this video, I do want to bring to your attention the DXY, the TOT, the SHY, and the junk bonds. Let me just explain to you, as long as the DXY goes up, it makes the dollar stronger, which means that it's costing more for international companies to be able to operate in a very inexpensive way. And so when the dollar rises, they have to pay more. And so that's not bad for inflation or the market. Okay, and right now we have a rising DXY. And when the DXY rises, spot tends to drop. And we have a break above 108. We have a high of 110. We've broken a range here, which is a high of 109. And so it's not looking too good for SPY as of now, which is why I say we could see further downside. And these are just the facts. Keep in mind that intraday could change these. Any type of data that comes out that contradicts the Fed's movements, we could see a rally in the market. All right. DXY could see a push to the upside, but if SPY does drop and we see continue to get continuation to the downside on SPY, then we would just monitor the levels for DXY, and when it starts to reverse, then we can look into these things and look at for the inverse. SPY goes up, DXY drops. And what would trigger that? I tell you, the earnings coming up this week, earnings seasons. When these companies report earnings, it does something to the algos. And if you can understand DXY going up means it costs more for companies internationally to do business, right? Then you can understand why SPY would fall, because it's signaling recession. And this is the sentiment, okay? All right, so let's try the TLT. The TLT is the most important. I wish I would have started with this in the first beginning of the video, but the TLT is very important. It's the 20-year plus treasury yield bonds, and right now we have a downtrend. Okay, when you start seeing people rush into this and it starts going up, that's when you want to start having some fear about SPY going down as well. So this is another metric that most professionals use. You can look this up, ChatGPT it, whatever you need to do to feel comfortable. Just know that the TLT is watched very heavily, and I will be watching this tomorrow as I trade. And let's move over to the SHA. The SHA is a 1 to 3 treasury bond, so it's a shorter term. Now, if you're wondering what does this stuff mean, these ticker symbols that I'm typing in, I use these as a metric and a gauge for the overall sentiment of the market. Most importantly, I use them to hedge, okay? And so in my long-term portfolio, I could be 60-40, 40 equity, 60 bonds, and it goes even deeper than that because I use it in correlation. And so if I spread out my money at the right times, depending on inflation fears, I either can go cash and not put my money in at all, or I can just hedge and make money regardless. And the whole point is to rotate your money as the market rotates, so you don't have to be in drawdown, okay? And I just want to leave you with that. Last but not least, here are the junk bonds, another measure. Right now, seems like we have a little bit of bullish engulfing here. The junk bonds are another proxy for the SHA. It's actually the inverse of SHA. They both work together, but in tandem to understand sentiment and fundamentals. And if this seems a little complicated, I understand. I will do a deeper dive into this, but I just wanted to bring it to your attention. Okay, so to end the video, I just want you guys to just think about this, right? I want you to think about something. The market is not about being right or wrong, okay? The market is about finding setups. The market is about understanding market structure. It's about understanding price action and what kind of day types are we dealing with, okay? And there are people putting strategies on SPY that you would never believe. And so continued education is probably the best, all right? Now, order flow and volume are the best things anyone could do if you wanted to enhance your trading psychology when it comes to trading SPY or the NASDAQ. And so there's a video that should pop up to the right of the screen that talks a little bit about it. Fast forward towards the end of the video and you'll see some information from our book and about order flow. Check it out and let me know what you guys think. I hope that is helpful. All right. And those who have got this far with me, who took in a journey with me and took in a chance tonight, I really appreciate your time. So if you found this video at all valuable, please like, share, and subscribe, and spread to your friends and family for them to get some insightful video updates on this trading world we call an auction. All right. And so until the next time, guys, peace.